October 25 is shaping up to be a pivotal month for XRP investors. Two major regulatory decisions are converging that could significantly reshape XRP's price trajectory. The first is the SEC's final deadline to approve or deny spot XRP ETF applications. After months of extensions, it's hard to imagine another delay. With issuers like Bitwise, Grayscale, and 21 shares in the mix, the question on everyone's mind is, what are the odds of approval? If the SEC gives the green light, it could open the floodgates for institutional and retail investors alike. We've seen this play out with Bitcoin. ETF approvals often trigger sustained rallies, driven by new inflows. The key difference here is that XRP's market cap is much smaller than Bitcoin's was at the time of its approval, which could amplify the impact. Imagine the potential surge in demand if institutions can invest in XRP through a straightforward ETF, instead of navigating crypto exchanges. Now, let's not forget about Ripple's banking license application. The Office of the Comptroller of the Currency, or OCC, is also due to make a ruling by late October. If Ripple secures a national banking charter, it would be a game changer, allowing the company to operate as a federally regulated trust bank. This would not only legitimize Ripple, but also provide the regulatory clarity needed for large-scale enterprise adoption. Could this push XRP into double digits? It's certainly within the realm of possibility, requiring just a 3.5x move from current levels, a feat that's well within crypto's historical range when strong catalysts align. But it's not all sunshine and rainbows. There are real risks to consider. The SEC could still deny the spot XRP ETFs. The regulator has been cautious with crypto ETFs beyond Bitcoin and Ethereum, and XRP's past legal battles could influence their decision. On the banking license front, national charters aren't handed out lightly. The OCC will scrutinize Ripple's capital, management, and compliance, and Ripple must demonstrate it meets stringent standards in a competitive landscape filled with established financial firms. Then there's the proposed Responsible Financial Innovation Act, or RFIA. While it could bring clearer rules for the crypto space, it might also introduce new compliance obligations that could affect XRP's utility in cross-border payments. So, what does this all mean for XRP? October is a critical inflection point. The overlap of ETF decisions and the banking license ruling creates a unique upside potential, but nothing is guaranteed. The momentum around XRP's institutional adoption is palpable, and if we see regulatory clarity alongside ETF access, we could be looking at significant price appreciation, potentially pushing XRP into double digits. Technically, XRP needs to reclaim resistance near $3.30 to validate this bullish outlook. If it fails to hold those levels, we could see a retreat to $2.60s or lower. This adds another layer of complexity to an already event-driven October. Prudent investors should prepare for both scenarios: transformative approvals that could drive sharp appreciation or rejections that might create near-term weakness. Even if XRP appears compelling, concentrating your investments in a single stock or cryptocurrency carries inherent risks. Ultimately, the question isn't whether the catalysts for XRP exist. They clearly do. The real question is whether the regulatory environment has evolved enough to support XRP's institutional ambitions. The answer to that will likely dictate whether XRP enters a new growth phase or slips back into uncertainty. For XRP holders, October will be a true test of patience and conviction. The upside is real, but so are the risks.